Hey fools, you see a big activist stake coming out with Bill Ackman and Air Products, one of the bigger news items of the day so far out of the material sector. Why do you think he's buying into this company, Joel?
Yeah, definitely. This is an interesting purchase for him. It's a 9.8% stake in the company, about $2.2 billion. And when you look at this company, it's up 23% year to date. It's not one of those cheap companies that you typically see activist investors jump into that have a number of either management or debt issues. It's also trading at a pretty high level, over 21 times earnings per share, and then also over 5 times tangible book value. So it does look expensive. However, when you look at it, there's only 3 large competitors globally, so it's in a nice market, and really you can't see a lot of new entrants coming in, so there's a wide moat. And the reason that is these are very capital intensive industries, plus you have to have the infrastructure in place to deliver your products, because shipping is a key part of the business here. So with that, you can look at how the contracts are made up, and they're very long-term contracts, take-or-pay contracts, which is very nice. And you can really get stable cash flows from it. And as you depreciate your capital expenditures, the business becomes more profitable over time, which is very nice, and that's probably what he's looking in here, is seeing that it's pretty cheap at this level, and as a lot of these newer facilities are depreciated, there's a lot of growth. And on top of that, with the upside of growth, there's also a very nice dividend. It's about a 2.7% dividend. And if you look at their dividend over the history of the company, they have 31 consecutive years of continuous growth in that dividend. So that's obviously very nice for them as well.
Yeah, I hope it turns out for him a little bit better than his stake in JCPenney has over the last couple of years, especially for the blue enamel industry. Helium coming out of Air Products could be pretty important to a lot of the clowns and birthday parties around the world. So you look at another company that came out with earnings just recently, had a pretty big week. ONEOK, the general partner, and they have a ONEOK Partners pipeline midstream company here in the United States. What's up with them today?
Yeah, definitely. It's been actually a very nice week for them. About 6 days ago, they came out with an announcement that they're going to split off their natural gas distribution business, and they're going to basically go into being a sole general partner. That new business will be now the largest publicly traded natural gas utility, and it's also a regulated utility with about 2 million customers. So, this is a very nice move for them. They're up about 20% with that and in their earnings today. And if you look at their earnings, they came in at about flat, but that was a lot to do with a non-cash charge, where basically they're winding down their energy services segment, which should be closed in the first quarter of next year. So, the write-off's not a big deal. When you look at them, they are keeping the same guidance that they had. And then if you look at their distribution and or their natural gas distribution, that's one of the key business for their limited partners. That increased by 28%, so that's obviously very solid. They came out and reaffirmed their guidance. So, if you look at this company, they have nice inputs in place with the new general, with the ONEOK Partners, and then also this new business. They're really focusing on separating the businesses so they can lower the cost of capital, focus on growing them, and really becoming a distribution company, and really focus on returning that to unit holders or shareholders by increasing the distribution. And they're making nice progress there. You've seen new pipelines with ONEOK Partners coming out of the Williston Basin, which, as you know, there's a lot of flaring up there already. So there's a lot of companies that are looking to move that natural gas into the market. Yep. So being a first mover in that area could really help them out as well.
Yeah, and investing in ONEOK, you could avoid the extra tax forms with ONEOK Partners if you wanted to get into the midstream business, which I do think ONEOK Partners is in a very favorable position once natural gas and natural gas liquids prices start to climb a little bit higher.
Definitely.
And then moving on, we have a downstream refiner, Phillips 66, had a great 2012, or what it was there for, because it came on a little late in the year. But what exactly has this company shown you recently?
Yeah, definitely. We knew that this was going to be a tough quarter for almost all United States refiners. Valero, when they came out last week with earnings, their net income was down 43%. We were looking for similar drops in Phillips 66. Their net income was down 34%, and a lot of that had to do because the refining earnings, they basically came in at $404 million lower than the same quarter of the previous year. And a lot of that is because the WTI Brent prices were shrinking, not having that advantageous crude that they had in 2012 really hurt them. So, looking forward, this company, Phillips 66, has really expected this. The industry overall has expected this to happen. So they went out the last few years when things were good and really went and improved their business. They paid down debt. They bought back a lot of shares, knowing that this was going to happen. And then they also split off their Phillips 66 partners that are midstream into an MLP, which will help them there. And also they have that 50-50 joint venture chemical business with Chevron that's been fantastic. And if you look at that business where they're putting a lot of money and really growing that, they were one of the best return on capital employed chemical companies out there, 25% year to date, which is solid. So they're really going out and finding other businesses, and they're also in a pretty prime spot because about 35% of the crude that they have going into the refineries right now are heavy crude, which you still can see heavy crude out of Canada at a greater discount than the WTI or Brent. So they're really positioned well as a refiner and chemical business.
Especially if pipelines out of Canada help distribute the oil sands, heavy crude, a little bit more than you have seen in the past. They're just waiting to unleash that on the market. So in Phillips 66 case, apparently that's going to be a good thing once it does actually come to fruition. So those are three big news items here we've seen this week out of the energy material space: acquisitions, earnings, and changing up of a general partnership. So be sure to check out more on these companies and the entire sector as a whole on Fool.com, and keep fooling on.